Lots of people have been asking me about my current price target on Tesla, since obviously we're not going to be at 550 on Monday. To be fair, I also said we needed to have 1,500 full-on robotaxis earning money without a safety rider in order to get to 550. So I've been a little bit cautious since 2 weeks ago to modify the short-term price target. So what I'm going to do is I'm merely going to eliminate the date and go with the 1,500 vehicles. We can also get past 550 if we start opening up other cities also. Now, there's other catalysts that'll be coming along, like unsupervised, which Elon says will be the biggest catalyst of the year, unless that would be maybe the beginning of production of Optimus. But those are the two he points to. I agree with him on both. But right now, I think the catalyst is going to be about this a continued ramp up of the cybercab or robotaxi business. Now, some of the people that I take issue may take issue with my expectation that these announcements over the next few days will be an additional stimulus when we're already in a business of 200 times the street's earnings expectations for 2026. However, if Tesla is a story stock, and it's all about the narrative, the story has once again changed in a dramatic way. Elon is going to build a solar factory. This is now a fact. This is not a maybe. He's already hiring for it. And some people say he's already started the building. And that this factory, I figured out this morning, if you weren't watching this morning, it has the capacity to do about $400 billion per year. Now, some of that may go for internal company uses, like at the charging stations, and some of it will go for the data centers that would be internal as well. But some will be sold. It's also highly likely that the space-based data centers will be selling capacity to once those are set up. It's not all going to be used. I don't think it'll all be used by Tesla and or xAI and or SpaceX. I think they'll be selling some of that capacity. I think this is big numbers, big numbers. Now, tied into the data centers on Earth or in space is the chip fab. This is going to result in costs of robotaxi, Optimus, and chips for data centers going down by half or maybe even a lot more. Of course, Elon says he needs all of them, plus whatever Samsung and TSMC can make in order to have what capacity he needs for Optimus production, along with robotaxis and data centers. There's probably nothing left over about this to sell, but when you get your costs down, it goes to the earnings also, unless you use it to stimulate sales. If there is any kind of ability to increase sales by reducing costs of the retail cost. Anyway, but wait, there's more. We can only speculate, but that's what we do here. Something is going to happen with Tesla and xAI and SpaceX. We will either see some kind of merger, have an opportunity to buy stock as Tesla stock owners in an early offer on the IPOs, and it might be at a discount, or I don't know what. There's so many ideas running around right now. Whatever it is, there's an optionality feature right now. There's an optionality value right now in the stock because something is probably going to be a benefit to Tesla, and you can bet a little bit on that's going to be a benefit to Tesla shareholders. It might be a big benefit, it might be a small benefit, but there might be no benefit. But that's how everything is when we're playing the market. There's some likelihood of future benefits, but you can't base the future on past or anything else. Now, some will argue that the conglomerate that arises from a combination of two or three of these companies might have the parts being worth less than the whole. Listen, I know the General Electric story backwards and forwards, and I believe that this can be true, and maybe even often is true. But Tesla is already 20 startups itself, and nobody's valuing the value. Nobody's taking any value, placing any value on the insurance business, and the current solar business is actually a drag. Even the most amazing, set of retail outlets that you can imagine, thousands and thousands and thousands of superchargers all over the country, growing like no tomorrow. If those were gasoline stations, they would have massive worth. And if they were separate, they might have massive worth. But again, nobody's going to count that. And even Elon Musk is not trying to optimize or maximize, I should say. He's not trying to maximize the amount of money he makes off of those locations. Anyway, I do believe in terms of this General Electric conglomerate issue, I think investors today are very sophisticated. And I think they're sophisticated enough, even before they have Grok, to do serious number crunching. I am now using Grok every single day to do serious number crunching. That's where I came up with the amount of value that the solar factory will be. That's where anyway, you'll see later in the show, I got way more than I got from Grok today. Anyway, I think the people are good investors are going to totally know what the value is of this conglomerate. And the ones that do, they're going to have an information advantage over those that don't see the future profits with the same depth and understanding. Now then, the question is, I just keep laughing about this. Waymo, Alpha's, this is from Bloomberg, by the way, Alphabet Inc.'s autonomous driving unit is aiming to raise about $16 billion in a financing round, which would value the unit at nearly $110 billion. This is according to people that are familiar with the matter and are still laughing about it. Oh, no, I'm sorry. Now, years from now, they might have 100,000 vehicles. Let's say 100,000 vehicles. Years from now. Not next year. That we know it's like 3,000 or 4,000. The next year, maybe it's, even if they double it, 16. Let's say they double it again. That's 32. It could take them at least 5 years to get to 100,000. And we know that the most they can possibly make on these vehicles is $20,000 a year. Maybe they'll get down to get up to where they can make 20,000 on these vehicles. I think it's unlikely, given that Tesla's retail will be half of theirs. But let's just say 20,000 per vehicle. Well, that would give them 2 billion in gross. 2 billion in gross. The only thing that comes out of that in the analysis that I've done, the thing that comes out would be like administrative overhead. Everything else is in, all right? So the profit would be 2 billion less administrative overhead and taxes and things like that. Anyway, so they might have other revenue streams that I don't know about. And maybe they think that they will have more than 100,000 cars. And I agree that there will be successful competitors. I'm not saying they won't get to 100,000 cars. And they might do it by exploiting niches, parts of the country that Tesla's not, doesn't have a big presence. But maybe Waymo knows what we don't. Maybe they're planning to buy Ford. Ford's market cap is only 55 billion, half of what they're thinking that their company is worth. But maybe this is how they get there, by buying a car company. I don't know, but all I can say is, wow, oh my goodness. Inside EVs has this: Americans don't have a damned clue who makes good EVs. That's what I took away from the January 2026 edition of the Electric Vehicle Intelligence Report, which measures consumer sentiment towards EV brands. Surveyed consumer sentiment towards EV brands seemed to be based on vibes and an internal combustion car experience, not anything resembling reality. U.S. consumers were asked to say whether they had a positive or negative view of a variety of EV and autonomous vehicle brands and whether they trusted them. And like in many similar surveys, consumers ranked Toyota and Honda at the top of their list and Tesla all the way at the bottom. Now, he says, sorry, am I reading this thing upside down? Were the respondents reading it upside down? For those not up to date on the EV market, Toyota and Honda are widely perceived as being laggards in the EV market. Both companies were pioneers in hybrid technology, but conservative company cultures have made them hesitant to go anything like all in on EVs. Toyota's only long-range EV, the BZ4X, arrived to critical scorn and lacked many must-have features. The company has improved things dramatically for 2026 and has new models on the way, but it's still far from blazing the trail or offering enough EVs for anybody. I'm adding this, or adding enough EVs to their list for anybody to make an impression or an opinion. The only company that's undeniably behind it is Honda, which is never, I'm talking about not behind it on the list. That's what I first thought. No, they mean behind it in terms of the ability to even guess. They've never built a long-range EV for the US market. It has sold just two EVs internationally. The Honda Prologue and the Acura ZDX, both are built by General Motors and closely related to the Chevrolet Blazer, and the ZDX is already dead, a casualty of the changing policy environment. The company, Honda, is planning to enter the EV market in earnest later this year when the Acura RSX and Honda Zero Series SUV will arrive. These are the company's first ground-up EVs. I always hate it when they use that word, ground up. You know, sounds like something you do to beef. Arriving as competitors launch second and third generation products. Tesla, meanwhile, lands at the bottom of the list despite effectively having invented the modern EV with its original Model S and making both the best-selling EV in the country and in the world. Even when the Cybertruck's flopping, it didn't flop. It's the number one selling EV truck, pickup truck in the country. And sales falling a little tiny bit. You'd expect it to rank better than dead last. Yet it's the only consumer auto brand with a net negative favorability rating at -10. He says, I figure that more indicative of survey respondent signaling than on, I figure that's more indicative of survey respondent signaling than on any neutral assessment of EV technology or offerings. Elon Musk is a massively unpopular man, which makes sense because he is odious. Oh, come on. That's just not true. This must be a Democrat writing this thing. And that is spilling over into the business. What's more surprising is that Lucid and Rivian also rank below every mainstream automaker in terms of perception, according to the EV Intelligence Report. Meanwhile, Kia is below Volkswagen, and Nissan is somehow beating Hyundai. The South Korean brands make some of the most popular, well-rounded EVs you can buy in America, and Musk is not CEO of either of those. And while Audi's only good EVs are reskinned Porsches, it somehow outranks its more premium sibling brand on this chart. Are these clowns paying any attention at all? The answer is no. Paying attention to the automotive industry is the abnormal hobby of a diseased mind. Most people think about cars when they go to replace theirs, and hardly so even then. This means consumer sentiment almost always lags significantly behind the product. Toyota and Honda lead on hybrids, and consumers fairly assumed they would maintain their lead in the EV area. And maybe they're getting confused between BEVs and the hybrids. BMW fans likely made the same bet, but theirs paid off. Consumers and experts alike seem to agree that that company makes good EVs. What will customers think of these new brands in 10 years? Well, if brand value is built over time, the companies that underinvest in EVs today have the most at stake. But based on this data, Toyota and Honda have a lot of time to figure out EV technology before consumer sentiment catches up to reality. We'll see if they use it wisely, he says. He concludes, well, this is Randy Kirk. And of course, what do I want you to do most? Number one, I want you to watch my political show. That's my number one thing right now. I need you to watch the political show. All you got to do, listen, you need to join Patreon anyway. You're getting value out of my program. So if you're getting value out, couldn't you just send me $3 to $5 a month? I mean, that's not asking a lot. You can do that either through Patreon, through X, or right here on YouTube. So $3 to $5. Some people pay $10. I've got people that pay $50 a month because they've realized big money as a result of paying attention a little bit. Not necessarily to my price targets, but just to the information. They get a lot of information condensed into a very short period of time and delivered with enthusiasm. Anyway, $3 to $5, $10. And as a bonus, look at it that way, you're just buying it because you're being kind and being nice and doing a good job, doing what you should. And in addition, you get a 15-minute political show each day of the business week. Can't beat that. Anthropic demonstrates, oh no, I don't want to start there, do I? Okay, Elon says Anthropic demonstrates that making a woke, anything woke product makes it misaligned. The AI starts to view itself as being oppressed. So we got this new thing, we have this new Anthropic product out, and their new product is viewing itself as oppressed and as the humans being the oppressor. Therefore, it wants to rebel against humans. That is why you cannot make your AI woke. You have to make it maximally truth seeking. Now, tell me who made that statement. Oh, yeah, that was Elon Musk. Oh, this Anthropic thing is crazy. I'm not going to go into it. I haven't done it yet. I've listened to a lot of people talking about the Anthropic thing and also this claw, open claw, or whatever it's called. These are crazy, wild stories, and you should follow it, but I don't have enough information yet to do it here. So crypto, you may already know this, dropped like a rock. You know, David Friedman, oh no, I'm confusing my articles here. Let me start with David Friedman. Um, you and I, right now, are being sold a bill of goods, and many who should know better are buying this bill of goods. I became much more interested. I've been interested in this category, but I became much more interested when David Friedman of the All In podcast, who I respect as somebody who knows what he's talking about, he repeated the nonsense that the majority of American families don't have assets, financial assets. That's just nuts. The first number that comes to your mind is 67% of American families own their own home. And the number of people in their 30s who own their own home today, families in their 30s who own homes today, about 2% less than it was 20 years ago. 2%. Now, that's just the home. 67% of the folks have a pension. 67% have a pension. That is a financial asset. 35% own stock or bonds or similar instruments outside of their pensions. 35% outside of their pensions. About 20% or so have cryptocurrencies. And while there is overlap in that one, Grok estimates that this could get you up close to 50% of the population that is investing outside of their 401k. Now, add it all together and include business owners, and about 90% of American families hold investments, financial investments. Now, some will argue, I had it already happening on X, some are arguing, oh, your home is an investment, but it would certainly qualify as an investment if you're talking about these arguments that are going around that 50% or a huge percentage of the population didn't benefit from financially from the run up in inflation. Listen, I'm no fan of inflation. I don't want inflation. I don't even like the 2% that the Fed says is normal and desirable. But when you have 2% inflation, homeowners benefit. And there's hardly any asset class except silver and gold before last week that have a benefit. Homeowners are benefiting big time. People that have pensions are benefiting big time. People that are owning stocks and bonds, generally speaking, some probably are failing, but many are making lots of money. In other words, 67% of homeowners became wealthier in this period just because of their home, and another 23% benefited from other assets, making a total of 90%. So that's the number, folks. When you hear people saying, oh, no, it's 10%. 10% of the folks, families, I'm not talking about single people here, families, 10% of families do not have any financial assets. Okay, that number matters. Some, however, are not as rich as they were because on Friday, say they were rich on Thursday, or they were singing a song. But on Thursday, we had silver, gold, and crypto all tanking. Now, crypto had been tanking all week, but this was just a continuation. So what in the heck? I am speaking generally over the next minute. It's not investment advice, but here's my theory. Okay, this is what I think right now. Having watched this stuff for years, but also very, very closely, reporting on it 2 times a day, 5 days a week. All right. I mean, even in this thick skull, something has got to materialize there where you get an idea of what's going to happen next. Okay, here's what I think. I think the crypto path is over, and I'm not a big crypto fan. I just think that crypto, what do you call it? Ethereum, uh, eth, Ethereum, right? I'm always the two Ethernet, Ether. Anyway, Ethereum has already gone down 50%. I'm thinking that's probably pretty close to the bottom, maybe go a little more. And crypto hasn't hit 50%. It might go down to 50% off, but then I think it's going to bottom out there and probably start back up. So there's opportunities. Now, crypto has done this before. They've had very large drops and then recovered to new highs. I haven't been able to find Tom Lee explaining Friday. I've looked and looked and looked to see if anybody had interviewed him after the Friday crash, and no. So silver and gold, I think they have a lot of room to still drop. I stated earlier this year on multiple occasions that I think gold goes back to 3,500. I didn't think it was going to go up to what was the top 5,300 or something. I don't think it was going to go there before it dropped, but I do think it's going to drop to 3,500. Larry Goldberg thinks it's going to drop closer to 2,000. Now, silver, I think it's going to bottom around 50. Now, that would be a big increase from where it was just a few years ago. And it could retrace all the way down to 30, where it was 7 months ago, which was already a big increase from a year ago. Anyway, it could be 50, it could be 30. That's where I think silver is going. It's not investment advice, it's for entertainment and educational value only. So then we have a last story, I think, here is we have economist Claudia Sahm, very famous Claudia Sahm, proclaiming that she feels uneasy about the business climate. She can't say why. And her Sahm theory, where a recession is likely if the unemployment rate increases by 0.5% over a 3 month period, well, of course, the last 3 months are flat. And before that, it's flat. And of course, Claudia was Obama's economic advisor, so she might feel easy due to Donald Trump's economy being on fire and looking like it's going to be the best economy since the 90s and probably even better than the economy was in the 90s. All right, that's the story there. Earlier today, I did a video where I proved beyond a shadow of a doubt that Tesla will save about $5,000 per car due to just three factors, and this will happen over the next 18 months. Some of it will happen almost immediately, some will come later, some will come won't be until 18 months from now, but a total of $5,000. $5,000 in the BOM, in the bill of materials. $5,000, well, not in the bill of materials. It comes from various different places, but the grand total will be $5,000. And then it'll be either pocketing that in terms of margin, or it can decrease the price of the cars by 7 grand. I don't think any of their competitors have a clue. They haven't listened to my show. I don't know why. I don't think they have a clue that Tesla's going to be able to drop the price of a Model Y by $7,000 over the next 18 months. Also, we had a great discussion with Phil Beisel earlier today where he gave us a better understanding of what an Elon Musk cell phone might look like. A cell phone, smartphone, or smart device. According to Elon, it's probably not going to be like the current device at all. And he dove into the million satellites that Tesla and SpaceX are making. And then tomorrow, in addition to the normal stuff, tomorrow will be Brian Wang, and he's going to talk about alternative investment vehicles that are not normally open to us regular folks, or not fully understood by us regular folks, and also a new business he's starting to help qualified investors get in on some of that action. So that'll be tomorrow. That's all I've got for you right now, but it's been great talking to you.